on April 26th, a final settlement was reached, and lo and behold, not even a week later, Tesla raised capital on May the 2nd or 3rd. So people say that Tesla Q Twitter was wrong about the can't raise, can't leave theory, but based on that aspect of the SEC settlement, maybe that was holding back their ability to raise capital. But clearly, that final settlement being entered did allow them to raise capital again.
The Tesla Q podcast is for informational purposes only and is not intended for and should not be used as financial, investment, or trading advice. Research associated with fiscal decisions should be conducted elsewhere. The host of the show possesses no license or credentials to warrant accepting advice based on what is heard on the Tesla Q podcast. Additionally, even though the host and guests may hold positions in companies discussed on the show, they don't have insights into the next time step of the simulation. Therefore, do not make any financial decisions based on the contents of this podcast.
Hello, and welcome to episode number 52 of the Tesla Q podcast. There are 52 weeks in a year, and it's been almost exactly 1 year since I started the podcast. So happy 1 year anniversary to all the listeners out there. If you're not yet a contributor to the podcast and you'd like to become one, you can go to patreon.com/TeslaQ podcast and sign up to be a monthly contributor. There is occasionally some content that's available only to contributors, so feel free to join up there if you'd like. With this being the 52nd episode and having been around for a year, that means that we've averaged right at one episode per week. So going forward, that's going to be my target for how often new episodes get put out. So one per week. That's the sequence that Tesla Charts is doing with his Chartcast podcast. So he's put out 3 episodes so far. If you haven't listened yet, I highly recommend it. The next one is going to be episode number 4, which is going to be part 2 of the Aaron Greenspan interview. So I highly recommend that. As far as I know, he's only the second podcast that is related to Tesla from not the positive side. I actually have been watching some of the Third Row Tesla podcast earlier this evening to see kind of what the other side of the trade is doing. And they have a pretty decent idea going, but I think trying to have 7 or 8 different people on one podcast episode is not quite conducive to people getting airtime. There's a few times where Galileo Russell looked a little bored sitting there, and Viv as well. That's just a lot of people to try to squeeze into an hour podcast. I mean, an interview with one person can take 2 hours or more if it's a good guest, like Aaron Greenspan on the Chartcast. It's a 2-part interview for that. With the Luis Carruthers interview, which was episode 2 of the Chartcast, I felt like that was far too short. So 7 people in an hour. There's a lot of people that are not going to get sufficient airtime for it to be worth their time, in my opinion. But that's just me rambling. So with this 52nd episode, I thought it would be good to go back and look at where we've been over the last year and just revisit some of the things that have happened in the past in the land of Tesla Q. I think looking at some past events with what we know today can add some extra perspective. So rather than going back only 1 year, I'm going to go back to the summer of 2018 and summarize some of the main events that occurred. Obviously, we had the Martin Tripp incident, which if you haven't yet, I highly recommend watching the 34, 36 minute long video of Martin Tripp when the police officers encountered him after the false threat had been called in, suggesting that he was armed and dangerous, which was completely false. I highly recommend watching that. You can see how distraught Martin Tripp was. Big shout out to Drew Harwell of the Washington Post for contacting Martin Tripp and letting him know that false claim had been called in so that he knew what he needed to do to help keep himself safe in case the officers might have had the wrong idea and actually thought that he was dangerous when he was not, in fact, dangerous. So go watch that. That video was filmed, I think, on June 20th. I may not have the date exactly right, but it was right around June 20th of 2018. That whole incident, I think, is what kicked Elon Musk off on his multi-month long just craziness of the summer of 2018, which also included the attempt to inject himself into the Thai cave rescue. It involved the declaration that they had finally hit 5,000 Model 3s produced per week at the Fremont factory, which may or may not have spilled into July of 2018, but that's beside the point. Also beside the point is the fact that the first-time quality was approximately 14% as of that 3 a.m. on July 1st, 2018 time stamp. So that happened. Obviously, July 15th, 2018 was the infamous tweet where Elon Musk referred to someone as a pedo guy, but he didn't mention his name, which ultimately was the reasoning for the not liable verdict that Elon Musk won on December 6th, 2019. So that was July 15th. July 23rd, we'll go back to July 16th, was the date that Galileo Russell and Montana Skeptic had a debate on the QTR podcast. And July 23rd was the day that Elon Musk contacted Montana Skeptic's boss and said, hey, this guy needs to stop writing articles. And for over a year, Montana did stop writing articles on Seeking Alpha and stopped tweeting as Montana Skeptic. But he has recently returned. If you're not following him after his return yet, you're behind on things, and you should get on that. In August of 2018, August 7th was the $420 per share funding secured tweet. August 15th or 16th was when the New York Times columnist, reporter, journalist, whatever title you want to give him, met with Jeffrey Epstein at Epstein's home in the Upper East Side of New York, 70-something Street, I think, just a couple block, maybe not even a full block east of Central Park. And the reason that he went to talk to him was to talk about Tesla matters. So we still don't know the full extent of that. That's yet to be fully revealed. I imagine that at some point we will find out more information about that. We haven't yet. August 16th into the Friday the 17th of 2018 is when the New York Times posted an article which was co-written by that journalist and three others that talked about Elon Musk and how he was so tired and worn down and works so many hours, and et cetera, et cetera. Later that weekend, Arianna Huffington tweeted that working hundreds of hours per week is unhealthy. No kidding. Moving forward to September 7th, 2018. Actually, September 6th is when Elon Musk was on the Joe Rogan podcast and infamously took a puff of a marijuana cigarette, which caused SpaceX to be given $5 million from NASA to explore the possible drug usage at SpaceX, or to educate the employees that they shouldn't do drugs or something or other, because their CEO took a puff of a cigarette on this podcast. Same day, or the very next morning, September 7th, 2018, is when the chief accounting officer, Dave Morton, resigned after only being on the job for about a month. I think he started maybe the day or a couple days before Elon made the funding secured tweet. So he was only there about a month. I think he went to work for Anaplan, which had a very successful IPO. So he made a lot of money with that move. So it was probably a good professional move for him. It should be noted that Anaplan has Baillie Gifford as a large investor. Baillie Gifford, of course, is also the largest institutional investor in Tesla. They're, I think, listed as number 2 behind Elon Musk as far as the percentage ownership of Tesla shares. Shortly after that, in, I forget the exact day, but it was late September 2018, is when the SEC was seeking some sanctions against Elon Musk because of his tweet. I think Elon was going to take their settlement, and then at the last minute he decided not to, so they were like, okay, well, we are going to request an officer and director ban and all this other stuff, and that spooked the market. spooked Elon. And on that Saturday, which I think was about the 28th or 29th of September 2018, Elon decided, okay, I'll take your settlement. And he ultimately paid $20 million from his own pocket, and Tesla also paid $20 million in fines to the SEC to settle that. Of course, later he was found to be in contempt of that, and there was the whole court thing with that. I'll get to that in a little bit. Monday, October 22nd is when Citron switched from being short to announcing that they were long Tesla. The Immaculate Quarter happened. Citron probably made tons of money with some call options that they bought. Later that same day, after Citron had announced that they had gone long, Tesla announced that they were pulling their quarterly financial announcement forward. Everyone had thought that it was going to be on Wednesday, the 31st of October 2018, Halloween. Tesla Charts had his 30 charts for 30 minutes set up as Chartoween. Everyone thought it was going to be on the 31st, but Tesla pulled it forward to the 24th. They announced a profit that quarter. Share price skyrocketed. I'm sure all listeners probably remember that. Going forward to December of 2018, on Monday, the 17th of December 2018, not long before the market closed, the article was published at 3:26 p.m. in the Wall Street Journal. It was the article that mentioned that the Boring Company had been provided some resources from SpaceX without the permission of SpaceX's investors. So retroactively, the SpaceX investors were granted an equity stake in the Boring Company. And of course, the very next day, the 18th of December, is when the Boring Tunnel reveal occurred. It was also the same day that Elon Musk mortgaged 5 separate properties with Morgan Stanley. It's a key factor or key player in the whole thing. On New Year or Christmas Eve of 2018, of course, the market as a whole plunged, and the plunge protection team came in and helped to raise market prices of lots of different equities, not just Tesla. So Tesla moved up from there to the 17th of January 2019. Actually, I'll go back a week before that, almost a week before that. The 11th of January 2019, SpaceX had some layoffs that were announced. January 17th, 2019, after the market closed, the Saudi Arabian Sovereign Wealth Fund somehow, I don't know how they had such perfect timing, but they decided after the market closed that day to hedge their long position in Tesla. And then, lo and behold, that very night, actually early in the morning on Friday, the 18th of January 2019, Tesla announced that they were laying off about 7% of their workforce. So that caused a pretty substantial share price drop of about $45 from the closing price on Thursday, the 17th of January 2019, to the closing price on Friday, the 18th of January 2019. That was actually my most lucky short-term Tesla options play. Lucky me. Caused me to enter future positions after that, hoping to catch lightning in a bottle again, unsuccessfully. But big share price drop. But then it recovered some after that and fell some more. And then on the 28th of February 2019, of course, we had the announcement that Tesla was going to finally have the short-range Model 3 available for sale at $35,000, which was the long-anticipated price. Of course, the $35,000 price did not last long. And in conjunction with that announcement, they announced that they were going to close all of their stores to be able to mitigate the lack of, or the reduction in margin from offering the $35,000 Model 3. It's like, okay, we have to save some money somewhere, so we're going to close our stores. But then on about the 10th or 11th of March, in the Wall Street Journal, of course, because that's where messages get sent in the news realm. there were quotes from Taubman, which is the CEO of one of the larger retail owners who leases properties to companies. And they reminded Tesla politely that Tesla had about $1 billion or more of lease obligations that they wouldn't be able to just get out of by closing their stores. So on March 11th, 2019, Tesla reversed that decision and decided, okay, we're actually going to keep our stores open. And in conjunction with that, right around the same time, I think it was on about the 9th or 10th of March, Elon tweeted that the Model Y reveal event was going to be occurring on the 14th of March, 2019. And of course, if you think back to that reveal, the Model Y was not all that impressive, and it looked almost identical to the Model 3. The examples that we've seen in the wild being tested still look almost exactly like the Model 3. Based on estimates from looking at the outside of the vehicle, it appears that there's no way that they could fit a third row that could fit adult human beings taller than, say, 5'5" in the third row, which Third Row Tesla, of course, I mentioned earlier, is the name of a pro Tesla podcast that has way too many people on it, but otherwise could be a decent podcast. But there's no way they could fit a third row of adult human beings in the backseat of that vehicle. So it's basically a slightly taller Model 3. So it's hard to imagine how they're going to have very many incremental additional vehicle deliveries from the Model Y. It seems more like it's likely to cannibalize the Model 3, but I guess we'll see about that. But similar to the share price declining after the standard range Model 3 announcement on the 28th of February, the share price dropped again 2 weeks later on the 14th of February, or March, right after the 14th of March. Similar to the recent product announcement, the Cybertruck, the share price dropped after that announcement with the wonderful unbreakable glass that designer Franz Holzhoffen, whatever his last name is, his excellent throwing arm shattered the glass, but it didn't go through, as Elon pointed out. So last three product reveals, Tesla share prices sold off immediately following. After the Model Y reveal on the 14th of March, there was the quarter one deliveries release on the 3rd of April, which also caused the share price to decline because Tesla's deliveries in quarter one of 2019 were quite low. There were the many people that called it an air pocket of demand. A lot of people pointed out that it was a seasonality driven thing. We're about to find out if it is a seasonality thing yet again for quarter one of 2020. Based on what I looked at just last night on the Troy Test-like tracker, it looks like there's not going to be a huge amount of deliveries in the U.S. in quarter one of 2020. I believe there were, since December 10th, there were not very many. I think it was like 27 configurations since the 10th of December in the tracker, after there had been something like 800 in October and 300 something in November, and like 27 since December 10th. So there were no scheduled deliveries for the year 2020. When I looked at the tracker last night, there was an Electric article earlier today that mentioned that some deliveries were going to spill into 2020. I don't think I mentioned yet, but this first part of the episode I am recording on the 30th of December 2019. As I mentioned, quarter one 2019 deliveries caused the share price to decline. Also, shortly after that, there was a little bit of a capital raise on May 2nd or 3rd of 2019. I think Tesla ultimately netted about $2.4 billion from that capital raise. It was mostly from convertible bonds and a little bit from selling shares at $243 per share, which is a little bit different than the recent share price if you've been paying attention. Shortly after that, there was a leaked email from Elon on the 17th of May where he mentioned that they had about 10 months of cash if they didn't start to save their cash a lot. That email actually came out, I think, in an Electric article on the 16th of May, 2019 at 5:40 p.m. So 10 months after that would be mid-March 2020. So I guess we'll see if Elon successfully motivated his team to conserve cash subsequent to that call. I think based partially on that email, the very next week on May 22nd, 2019, there was a private call with Morgan Stanley and Adam Jonas that ultimately became public thanks to someone recording it and transcribing it. And that was a cross-asset call, so bond investors and equity investors. And during that call, Adam Jonas was very transparent that the SolarCity acquisition had been a bailout and that Tesla did not seem to be in very good shape. Shortly after that, on June the 3rd, 2019, I interviewed Montana Skeptic for the second time on the Tesla Q podcast, and Tesla's shares were below $180 per share. Professor Damodaran, the valuation guru at New York University, put out a blog post that very same day where he mentioned that he had put in a buy order for Tesla at $180 per share. And Professor Damodaran has done very well with that purchase. So I don't know if he's sold yet. Maybe something to look into in the next few days or so. But congratulations, Professor Damodaran. You did well. I guess looking at valuations rationally can work sometimes, even if you may have to have some rosy assumptions. Going back to Adam Jonas, I don't know if he had the $10 Tesla bear case before May 21st, but as of May 21st, he had the $10 bear case. When that came out on the 21st of May 2019, that got all the headlines. More recently, when he updated the bull case from, I think, $450 to $500, that case got all the headlines. The base case has remained $250 per share. So Jonas has 3 price targets. Every other analyst out there has 1. So that's a little bit of a different dynamic for them. One thing that I've been saying to a lot of Tesla Q people is that Adam Jonas actually seems to have nailed this almost to a T with his $500 bull case call, suggesting that it could get to that level, but would likely drop from that. And he's got that $10 bear case out there that could come to fruition at some point, particularly if there's some kind of a full self-driving autopilot thing that happens in the near future. So I'm not saying that I expect anything to happen, because I don't, but it's a very remote possibility. July 3rd, 2019, Tesla had their Q2 deliveries announcement of 95,200 vehicles, which was an all-time record, which was subsequently broken for Q3 by about 1,800 vehicles. And as of the close on July 24th, just before they announced their Q2 earnings, the share price was about $262.50. Q2 earnings had a loss similar to Q1. Q1's loss was larger than Q2's, but Q2 also had a loss, so the share price dropped from the level it was on the 24th of July to the 25th of July. All right, so I just talked about July 2018 a little bit. The first part of this, as I mentioned earlier, I was recording on the 30th of December 2019. It is now the 1st of January 2020, and I'm going to finish out this episode, number 52. I'm going to go back a little bit. There's a few things that I missed in February of 2019. On the 19th of February was when Elon Musk tweeted about 500,000 vehicles this year. He later corrected himself and said that was a rate, not a total. The very next morning was when Dane Butt-Swinkus left as the general counsel on February 20th, 2019. The very next week, on about the 25th or so of February, might have been the 26th, is when the SEC announced that they were finding him in contempt of his settlement. An interesting note about Dane Butt-Swinkus' tenure as the general counsel of Tesla: He started on the 7th of December, 2018, and ironically enough, his successor, Jonathan Chang, as general counsel, left on December 6th, 2019. So almost a year to the day after Butsoinkas started as general counsel, Jonathan Chang left as general counsel. So they had 3 separate people in that role in just more than a year. Before Butsoinkas was Todd Marin, who had been Elon Musk's divorce lawyer, if I'm not mistaken, and then morphed into the general counsel of Tesla. So as I mentioned, February 26th or so is when the SEC announced that they were finding Musk in contempt of the settlement. Ultimately, that went to court, and on April 26th, a final settlement was reached. And lo and behold, not even a week later, Tesla raised capital on May the 2nd or 3rd. So people say that Tesla Q Twitter was wrong about the can't raise, can't leave theory, but based on that aspect of the SEC settlement, maybe that was holding back their ability to raise capital. But clearly, that final settlement being entered did allow them to raise capital again. As of right now, there doesn't seem to be anything that's hindering their ability to raise capital. So as of now, it looks like they can raise capital. So as I mentioned, the first part of the episode I recorded 2 days ago. What I was using for that was a stock price graph from for about a year, from like July 2018 through July 2019. So I'll add that to the show notes once I publish this. And now I'm just going to start going through some of my prior outlines. Not really any particular plan, but just going to look back at some of the things that I missed covering in the early part of this episode. So on January 7th, I think is when I put together the outline for episode 6 of the podcast. Around that time, the China Gigafactory had just broken ground. So that was a big event that is still a big event, as they just delivered the first vehicles that were at least partially put together there at that factory. There was the weekend drama with Grimes actually flying to China with Elon Musk back in early January. It seemed to be a kind of a last-minute decision for her to join him there, possibly because of Azealia Banks's social media actions and everything. There was a Shorty Ground Force Operation Snapshot that was done at the very beginning of Q1 2019, where inventory was counted in different lots and then summed together. I'm not sure that the Shorty Ground Force on Twitter is going to be doing a similar thing for Q1 2020. I imagine there are still going to be people that are checking lots, but I don't know that information is going to be shared for the whole world, and so we'll see about that. There was still a question back in January of whether the Model 3 had been homologated in Europe. Another thing, Fred Lambert reported about a fleet of Teslas that went to a rental car company in Norway. So that was about a year ago. Not any big deal. Nothing else all that interesting from the episode 6 outline. From episode 16, which was around February 10th of 2019. Apparently I recorded this in my mother's basement, according to the notes here. What else interesting happened? Oh yeah, February 4th was the announcement of the Maxwell acquisition, which we haven't heard anything about recently. Maybe we will at the Battery Investor Day that is supposedly coming up in the first quarter sometime. There was the local Buffalo story about the factory there from Dan Telvach, and how they apparently had nowhere close to the number of employees that they were required to have as part of their agreement with New York State prior to the initial amendments, at least. As far as I know, they probably aren't very close to meeting their required number of employees as of, I think, sometime in April. So perhaps they will have to pay a $41.2 million fine associated with that. We'll find out more about that. I'm sure Dan Telvach and David Robinson will stay on top of that story. Back in February was when TeslaQ.org launched. So if you haven't visited the website, you can go there, check it out. If I'm not mistaken, there's been some new things added to it, or will be some new things added to it in the very near future. There was a video that showed up on, I forget if it was on YouTube or Twitter or something, but it showed a Tesla's odometer and it rolled back. That was pretty odd. That was back in February of 2019. There was the $731 net gain from Linda Rice Johnson exercising some options at a $320 strike price. If she'd held on to those until more recently, she could have made a whole lot more money than the $731 that she made from the 43 cents between the $320 sale price and $319.57 strike price. So she messed up there, I guess. There was an article in the LA Times from Michael Hiltzik around that time about Tesla. He has won a Pulitzer Prize in the past. I have that here in my notes. This was also the weekend where the information about the NHTSA data that had been used many times over by Tesla, claiming that autopilot was 40% safer than humans or something. That came out on the 8th of February, so I actually saw that get linked again today, or an article about that get linked today. There's a number of different things that the NHTSA could be looking at in regards to Tesla. Another item from February, this was from episode 21 notes that I've got here. Charlie Munger had his comment about Elon Musk and said that he'd rather have somebody with a 120 IQ, or somebody that thinks they have a 120 IQ, but it's actually 130, rather than somebody whose IQ is 150 who thinks it's 170. And he referred specifically to Elon Musk when he made that comment. On February 20th, apparently was the first time that Plainsight posted the deposition schedule for the SolarCity related lawsuits. Those are still ongoing, of course. There was a lot more information that came out in September and again maybe in October and November about that lawsuit, including those depositions, which are not a good look for Elon Musk and the other directors of Tesla. But we'll see what happens with that suit. I think there's a trial date maybe of April thereabouts. Don't quote me on that, but that's what I seem to remember. On February 22nd, it was pointed out that the SolarCity term loan, which I think had been $182 million, had been moved back. It was originally due in December of 2018. Then it got pushed back to January 2019. Then it got pushed back to April of 2019. Then it got pushed back to June of 2019. Then it got pushed back to December of 2019. And I'm not sure if they've actually paid that off yet or not, but it had been $182 million. It was subsequently down to like 161 or 162 as of the latest 10Q. So with their claimed $5.4 billion cash balance, not exactly sure why they don't just go ahead and pay that term loan off. But as far as I know, they still hadn't paid it off, but it was due last month, December 2019. So should find out more about that in the 10K coming out at the beginning of February. There was a response the same day in the Unsworth trial about Musk's lawyer's motion to dismiss. Obviously, we now know that Elon Musk was found not liable in that case at trial, although he clearly did defame Vern Unsworth. But that's beside the point. February 24th. How could I forget this? There was the crash in Davie, Florida that involved Dr. Omar Awan, who, from a few pieces of evidence, it looked like it possibly involved a wompy wheel, and then it clearly involved a fire and the inability to open the door. So that was a very unfortunate accident, and even more unfortunate is the fact that the eyewitnesses apparently said that they were trying to open the door, and they could tell that he was still alive after the crash, but they weren't able to open the door. And there is a wrongful death suit that's been filed in that case. I don't know if we'll ever find out the results of that, as it could very well end in a settlement and non-disclosure agreements, as most of the cases involving Tesla seem to do. I see here in my notes that on February 25th of 2019, there were some confidential treatment orders granted that were filed on Tesla's investor relations page, and those were related to their agreements with Panasonic. Ironically enough, just earlier this week, same type of thing. There were 3 different exhibits, one from Tesla's S1 filing, which is their IPO documentation, and then 2 different exhibits from 10Ks for the year 2011 and 2013, and those all 3 of those exhibits were related to their supply agreements with Panasonic. So those confidential treatment orders were granted through June of 2021. So they included some pricing schedules through 2015. So that was 4 or 5 years ago now, but Tesla wants to keep them confidential through 2021 at least, probably beyond that. They'll probably ask for another extension at some point. So nothing of any major note, but just a little tidbit, and funny to see as I look back through my notes. And since I've started going through notes from prior podcasts, I see that there are many things to cover, and this episode's already exceeding 35 minutes long, so I don't think I'm going to get all the way back to the present day with this episode, but I have mentioned a number of different things from the past that are part of why Tesla Q exists as an entity. So there's not a single reason that Tesla Q exists, but there are many, and there are many things that have already passed, such as the verdict in the Vern Unsworth defamation trial, which Elon won that. The SEC settlement is in the past. Elon did have to step down as chairman of Tesla, and he did pay $20 million, and Tesla had to pay $20 million as part of that settlement. But the subsequent finding him in contempt didn't really add anything additional to that settlement. It merely clarified it. So that's in the past. And as far as I know, Tesla does not currently have a general counsel. So the person who's supposed to help keep corporate governance in check and make sure that illegal things don't happen, that role is not currently filled as far as I know. So we'll see what happens. But as I said, I'm recording this on January 1st, 2020. So it's very possible that either tomorrow, if not tomorrow, definitely by Friday, the Q4 2019 results will be out, delivery-wise, not financial-wise. So that's something to look forward to hearing. And seems that from my perspective, seems that the current expectations priced in would be for somewhere in the range of 105 or 6,000 deliveries to about 108,000 deliveries. So a number below that range, I think the market would see as being bad news and cause the share price to drop. Above that range by just a little bit, and maybe the share price would go up a little bit, but I think it might take a beat of about 110,000 deliveries for the market to actually see that as positive in comparison to the current share price. So that's something to be on the lookout for. I saw that Tesla Charts has dropped episode number 4 of the Chartcast as of today, so I plan to listen to that before tomorrow's over at least. And that's an That's part 2 of the interview with Aaron Greenspan, where they get into a lot more detail about Tesla specifically, and not just Aaron's background with how Plainsight got started and everything. But that'll be something to listen to. And as I said earlier, I do plan to do about an episode per week. I'm not going to guarantee that every single week we'll have an episode, and I'm not going to guarantee that I may not put 3 episodes out some weeks if news warrants it. But the podcast is going to continue. Looks like Tesla Charts is mostly going to be doing interviews with the Chartcast, either interviews or maybe at some point it'll just be him and Georgia Orwell talking about Tesla. I don't know, but I will still do some interviews and some episodes like this where I just talk into the microphone and get stuff out of my brain and out there into the ether. But for episode 53, I don't know exactly what I'll do yet. I may continue through these notes of some of the Tesla Q history, just to remind us of why we're here and some of the things that have happened, and think back to how that impacted the share price or the overall narrative of the story. Another possibility for episode 53 would be for me to talk about some of these different issues that the NHTSA should be looking into right now. There's been a lot of talk on Twitter. I won't get into that here right now because it sounds like episode 5 of the Chartcast is going to get into that a little bit with one particular issue. So if I do an episode relating to that, I'll probably talk about some of the other issues besides that particular one, but we'll see. No guarantees of what the topic will be, but there will be an episode 53 of the Tesla Q podcast. If you would like to be a contributor to the podcast, you can go to patreon.com/TeslaQ podcast. And if you haven't already bought some Shorty merchandise, you can go to evacuationboy.com and find some coffee mugs and such there. And with that, we're going to call this episode number 52 of the Tesla Q podcast. Thanks for listening over the past year, and keep on listening. Thanks. Bye-bye.